Aloha, this is Joshua Hayes at BigWaveTrading.com coming to you again as I just made a video earlier, but something went wrong with it and somehow they're zooming in when there shouldn't be. So I'm going to wrap this one up fast. You guys can watch that one to get the main gist of it and then watch this one to actually get the charts of it. Here's what the New York Stock Exchange looks like. It shows the price below the 50-day moving average, below the 200-day moving average. If you'll notice in the video 1 of Wednesday, then I say that's very bad. And I've been saying that's been very bad since in June, since it's happened. And if you sold when the death cross, when they at least failed right at the death cross here in June, you could have made a nice little 20% gain right there. And another stock I wanted to look at was the NASDAQ, just because it's a different kind of stock. Dow Jones Industrial Average and S&P 500 look similar to the New York Stock Exchange. But the NASDAQ, as you can see, it fails right at the 50-day moving average. We're at the white trending line going in a downtrend. And you can see the nasty, nasty price action. And the relative strength line barely bounced compared to the downtrend that it went on. So this is very ugly. And then to show you how ugly the market really is, the S&P 600 shows you that after it tried to gap out above the 50 and 200-day moving averages and was making everything look pretty bullish for that index, like it would be a leading index when it came down. And in fact, it might be the last index that'll roll over before this bear market's over. So that could be the fact that our strongest index is our index that could be ready to roll over and now take us all the downside, because what has happened now is it has lost its holding of the 50 and 200-day moving average, and it's cracked right below the 50 and 200-day moving average in 2 days. I don't know if volume was huge on that, but if it was bigger than average, that's a problem. So that's what you got to watch out for in the market. Now let's go to the individual stocks I did. I did the 100 log scan, and I'm going to go through them very fast. Just show you what I call as an easy, pretty chart and what I don't. This chart's ugly right here, the red BOP and VRTX. This one's chart is ugly, deal right here, the red bars in FL. This one here is very ugly due to all the choppy action that I see in VFC. I wouldn't trust it anywhere. Leg Mason's another one coming from a downtrend. Maybe it's time for it to start going back up again, as it's already hit the 2007. But this is Leggett and Platt. Sorry, not Lehman. I'm an idiot. But as you can see, it's got roundish moves on the way down, and now it's going up. It's got V-ish moves. So this is just not a chart I want to play at all. UST. I'm not sure if that got bought out or what. To be acquired by Ultra Group by 69.50 per share. So it's a stock that's out of our range. In CMTL, there's a stock that's ugly due to all the red BOP here, all the red BOP here. Here's one that you guys all in the chat room always talk about: True Religion. Why do you guys like a stock that looks like this? Look at this. V V V V V V V V V V gap down V V V a U one finally, then V V V V V V V V V V V V V V V-ish action all the way across on this chart. Why do you want to be long something like this? Simply because it's bouncing off the 50-day moving average? That is simply retarded in my mindset, and I'm just glad that I'm past that stage of market newbiness to not realize what a good looking and an ugly chart is. But look at this one fail the 50 and 200-day moving all the time. Do you really think to trust it to stay above the 50 and 200-day moving average this time? I can't remember who was talking about it, but I have a feeling it was one of the guys that isn't around a whole lot during the day. SIGA is a stock that I've missed so far. Anyway, it hasn't even properly based out. From right here, it should have gone sideways, but this would have been a very pretty chart to base out. Oh, sirree, yes, this is one of my best longs. As I loaded up here, and since I bought it around the 1942 area, I have about a 20% gain. It says 1924 because, as you can see, the gap down on the stock just barely in the morning. It went from 1648 to 1642, which was big enough to give me the full 20%. So I'm going to go ahead and take 20% profits on this one, just to keep safe in a bear market. Take profits on the way up, and once I get to the 100% mark, if I still have like 30% of the stock, I'll go ahead and I'll just let it ride. CRI, it's a nice stock, but look, it's just now coming from a downtrend. A lot of V-ish action, so it's going to take a while for it to get back in an uptrend before we can find interest in it. TG is Telgor Corporation, aluminum. Look at how V-ish this pattern is. Just horrible. CAI, look at that, just horrible. Ugly V-ish patterns all over, including the most recent V-ish pattern, which was super short term and just super ugly. Then there's WBSN. I do like the way this one is setting up. It did have its V-ish price formations, but they weren't as many and as acute. They weren't like this, like they were on almost all the other charts. They've slowly have come down and they've calmed down. And even though that's V-ish here, it's calming here. It's very calm up here, and if it can be very calm right through there and then break out around the 24 area, I might consider going long WBSN. Then there's WRE, which is another sloppy, choppy stock that you can tell by just looking at it on a logarithmic scale. Look at all those V's. It's just not a stock you want to be long. And then let's go look at MBTV. This is a stock that I do like only because it's an uptrend. It's a bank, but it's a little, crazy for me. Let me go back to MBTM. I'm sorry, but it has a lot of max stream bop recently and a lot of volume, and that means if it can bounce off the 50-day moving average, I'll trade it. Remember, stocks aren't something you marry. Stocks are something you date. You only date them until they act right. When they start acting wrong, you dump them. So if you bought this stock right here at the 50-day moving average, you better act right away, because there's no way it should be going back to the 200-day moving average like it did here in July. SQM, here's a stock that I am long, I do believe, from right here. I am not long a lot of it because there wasn't a whole lot of great fundamentals, and I messed up on 74% whopping gain by not concentrating so much more on this chart as I was on the fundamentals. In 3 months, 74% gain to the upside in a bear market. You tell me what you'd rather play, a bear market that goes nowhere or a bear market that still has charts that are going up. There's Q-Core. There's one of the pretty charts, I call it now, because after all the max green bop and the solid price action, it's now moving up, kind of still in a basing, but trending like it's active because there's a lot of green bars and a lot of max green bops. So something's going right with this company. So this is something that I am long a little bit, hoping to be very long in maybe 2 or 3 years. IPCR, way too choppy and sloppy. No way I would go long something like that. NTLS, another one, choppy here. V-ish there. It's just too much for me. I can't deal with stocks like that.